Well, hello everyone. Welcome to Getting Started with Technical Analysis. Today we are talking price patterns, and we're going to talk price patterns. That's a 3-week portion of our 8 or 9 week series. And today was supposed to be bull flags, but bull flags were not in abundance today. So I picked a different price pattern to talk about. We're going to look at trend reversal patterns, and we're going to look at how one might trade those. And we're going to look backwards and forwards. We're going to play some new example trades. So I'm glad that you guys are with me. We have a lot of the usual suspects here. So hello to Will and Scott and Jay and Kevin and Josh and the rest of the gang. Appreciate you all being here. To Paul, Jenny, and AP514, along with Roderick and Tony. You guys were the first ones into the chat today, so congrats on that. And then we have a song that reminds me of Three Dog Night, or Joy to the World. Jeremiah, was a bullfrog. He was a friend of mine. I've got a friend of mine in the chat with James Boyd. So glad that James is with us. He's an expert in all these subjects. So if you know James, he brings a lot of humor to the table along with his special brand of expertise. So we're glad to have James along for the ride. If you are not following us on X, you are missing out at Barb Armstrong CS and at James Boyd CS. You're also going to want to be following us on LinkedIn. So wander over to LinkedIn and you can find us there. So just before we get into the thick of things, a quick reminder, we're going to look at a lot of charts today, and we're going to look at some different chart patterns. Know that this is all for educational purposes only, none of it to be construed as a recommendation on the part of Schwab or myself. We will do our examples on the Paper Money software application on the Thinkorswim desktop platform. Say that 3 times fast. We typically will use stop loss orders on our positions, and just know that when you use a stop loss order, it doesn't guarantee that you're going to get out at the price requested. We're in the midst of earnings season. 30% of the stocks that make up the S&P 500 are reporting earnings this week, and sometimes we see some gap action happening. In spite of what happens with the earnings report, a stock might gap up or down, and and that's when a stop loss order, can be a mixed blessing. Okay, so we are officially in week 5, but what we're going to look at today is channels and reversal patterns. So I'm going to kind of mix up this order a little bit in our potpourri of price patterns. I also wanted to make an announcement today, and for those of you who follow me in trading a smaller account, I did mention yesterday, last year I had my left knee replaced. We called it the Barb 2.0 project. And I figured that I would be leaping over small buildings at the end of that surgery, and I was not. So sadly, I guess I should have forecast that my hip and femur, I was hit by a car many years ago, have joined the Me Too project. So the Barb 3.0 project is beginning next Monday. I'll be out for a couple of weeks. James is going to be covering this class, and Connie's going to be covering most of my trading a smaller account classes on Mondays and Fridays. So if you're wondering what I'm up to, there will be drugs. There will be drugs and there will be surgery, but I'll come out of it more confident than ever that I'll be able to leap small buildings in a single bound. So I'm going to watch the Spider-Man movie on the weekend, I think, just to get me ready to go. So there's that. Okay. Moving on, we're going to have a look at these price patterns, and we're going to look at several of them, and we're going to look at how one might consider trading these. It's one thing to have knowledge, but if you don't do anything with it, it's just kind of edutainment, right? Right. Yeah, so Lakshmi is asking if I'm going to be in Dallas this weekend. I'm not. I was on the schedule, and the higher power said, you need to do a little R&R. So I'll be doing a little of that this weekend before the surgery. But I was kind of keen to go and see all of you. We're expecting in Dallas at that market drive between 800 and 1,000 people. So come and meet 800 to 1,000 of your closest friends. And a lot of like I made friendships when I was a client attending these live events that I have to this day. If you have never been, they're free to attend. We'd love to see you there. If you haven't registered, you can show up if registration is closed and we'll get you a spot. But they are really wonderful events. Okay, so here is, what we call a rectangle or a channel pattern or a period of consolidation. And if you look at Uber, although in Uber, it was downtrending and then kind of going into a period of consolidation, you'll see that on the chart. And sometimes this can happen for a period of months. I mean, we were doing trades on stocks going sideways. And at one time, Dollar Tree, went sideways for about 9 or 10 months, and then it broke out to the upside. And, that was a year or so ago. But this can be a consolidation during an uptrend, or it can be a consolidation at the bottom of a downtrend. So sometimes what we'll see is, just let me bring up my drawing tool. Make sure I'm on the right thing. You'll see something that's been coming down, and then it'll go through a period of consolidation and break to the upside. And so that's what we call a trend reversal pattern. And then other times we see this idea where something's, had a big run to the upside, and it's like it pauses to rest for a while, and then it continues on its way. So this channel can go either way. It can be a trend reversal or a trend continuation, and it can be bullish or bearish, and it can occur in any time frame. And this is why often you'll see instructors like James, for example, who, will look at what's going on up close and personal in the last maybe, 2 or 3 months, and then he'll back the truck up and look at, okay, what's happened in the last year, what's happened with this trend over the last 3 years, because it really helps put things in context, right? And we're looking for a strong trend either way that consolidates, and you've got these horizontal and support and resistance lines. And this entry can come at either a break of support or a break of resistance. Now, is that the only way you can trade this? No, like sometimes what people will do is they'll do, a strategy where they're counting on it continuing to go sideways. So they might do an option strategy like a short put vertical when it bounces off a support level, or a strategy like a short call vertical when it bounces off a resistance level. Or if you put the two of those together, you've got a credit spread sandwich, and we call that an iron condor. And then, if you say, well, you're talking about these fancy option strategies, Barb, I am but a simple man. I like to trade stocks. Well, sometimes within a pattern, somebody might say, okay, this is the second, like it's broken out, it's come down here once, twice, 3 times a lover. I'm going to buy the stock when it bounces off of here, and then I'll sell it when it comes up here. And then if it comes back down again, I'll buy it again, and I'll sell it when it comes and bounces down here. And if it breaks through, well, no problem. Okay. So, there's lots, there isn't only one way to look at a price pattern and trade it. Okay. But when it breaks out, so let me shake the Etch-a-Sketch. When it breaks out and you're looking at a target, and we're going to do a bunch of these today, when we're looking at a target, if we say, okay, this range is about $10 wide, a potential target could then be to say, I'm going to look at this horizontal resistance and I'm going to add $10 to it. Okay. So, and we're going to look at this, or if it breaks to the downside, $10 below. Okay. Okay. Now, a lot of these patterns, now this is a bearish pattern, and we're seeing some of these potentially setting up right now. We aren't seeing as many that have broken down, and I don't recall I would have, I'd be bringing one up if I found one on the charts today. So if you have seen one where it's broken down, type it into the chat and we can bring it up and discuss it. But often when we see a double top, and again, you know, as a target, if you say, okay, this is about 20 bucks from top to bottom, we'd expect a move if it breaks to the downside, $20 below. But it's not uncommon to see when something breaks down, it'll come up and retest. So this old support level, so old floor becomes a new ceiling, and then it continues on down its merry way. Yeah. Yeah, so Paul is saying in the chat, where it goes after I'm out is not my concern. Um, and while you may be right about that, a lot of times, like in our trading a smaller account, if something continues to go up, you know, we can do a wash, rinse, repeat and trade a similar strategy in a similar way. If the stock continues to go up and we have a bullish strategy, or the stock continues to go down and we're using a bearish strategy. So one might be interested in where that stock is continuing to go. You know, so there we go. Paul, Paul is saying, you know, we need an in-person event in New York other than New York City. I don't think you're going to see us do that. We'll do events, you know, in DC, like in the heart of New York City, because that's where we can get a venue that can accommodate the kind of crowds we're starting to attract. And smaller cities don't tend to be able to accommodate that. Like a lot of the cities on the West Coast, like we're maxing out those locations in Sacramento and Seattle. You know, and you'll see us do DC. We did Boston this year. I think we'll be back in Boston again next year. We'll do Miami, Orlando. So you may just have to bite the bullet, ride the train, or take a flight and come on in. And once you're there, you know, New York is, there's a lot to entertain other than what you're learning with us. Okay. Okay, so that's our double top. Now, a double bottom is like flip it and reverse it, right? And we're going to see more examples of this, you know, in what we're going to look at, where it's come down and then it comes down to a similar low. And again, you know, if we see a range here, and I'm just doing this for my Mathiverse brain, you know, we might put a target at 10. Now, might it go up further? Sure. Might it not get even close to being up 10? That's a possibility too. But this is how a technician, this is one of the ways a technician might determine a target. Okay. And this pattern, the double top, this is bullish. Okay. And again, it can occur in any time frame. And this is a trend reversal pattern. So something's been downtrending, then we see it start to consolidate and then break to the upside. Okay. And what is our entry considered to be is when it breaks resistance. Okay. And, you know, the target, it's written out here, but we're just looking at this difference and then we're, you know, we're adding it to the top. Okay. Okay, so I want to just actually, let's go back here for one sec. Well, I can just draw it here. So we had the double bottom, but in addition, there's a couple of other patterns that we can look at. And one of them is what we call a cup and handle. So something may have been downtrending, it's come down, comes up, and then it doesn't come all the way back down like the double bottom does. It comes part way down. And then it may break to the upside, come back and retest and go on its way. We call this a cup and handle. So here's the cup, here's the handle. We can also end up with, and again, you've had something downtrending where it's come down and then it comes up and then it comes down even further and you're going, oh, this is looking ugly. And then it comes like this again. And we call this an inverted head and shoulders. So here's the head, here are the shoulders. And whether it is the double bottom that we already looked at, or it could be a triple bottom, you know, or the cup and handle, or the head and shoulders, we measure them all the same. Okay. So Sharon is asking if anybody's going to New York City's advanced option event in August. I would love to be there, but I won't be allowed to fly yet. But I think that Kevin Horner may be there. Ben Watson will be there for sure. I don't know if that's confirmed yet. Yeah. But I'm sure it will be a great event. And then we'll be back in New York the Saturday before Christmas to do a market drive. And I will be at that one. So will Ben Watson. Okay. Sorry. So let's go out to I'm responding to answers in the chat. And we do have some new people here today. So to Shannon and the others that are new, like, welcome aboard. Sorry, here. Let's look at the SPX. So, you know, we had, you know, the S&P is up 8.5% year to date. We've had this period of consolidation. If we look at a 1-year chart and we say, like, you know, how much is the S&P up over the last year? Well, even with where it is right now, after this little bit of a pullback, it's up 16% in the last year. Now, on average, over the last 30 years, the S&P has been up about between 10 and 11%. The NASDAQ has averaged just over 13. And even though, like, Chicken Little is warming up and a lot of people have their knickers in a twist, I mean, this index in the last year is still up, you know, almost 19%, up almost 10% year to date. And we still have a lot of year to go. But the concern here is we have this pennant pattern setting up and it's broken down, now broken below this horizontal line, and it's now sitting on the 100-day moving average, which really hasn't been acting as a support level. It hasn't needed to, since it you know, worked as a support level kind of back in November through February. And so this is the question, you know, will this act as a support level? You know, and if it falls, it's got a ways to go. You know, where might the next support level be? Could be down here. You know, could maybe be here. But, you know, that's a lot of pain. And when you look at the tech sector, you know, and our role in this class isn't to spend a lot of time on this. But this is something to kind of keep in mind. And so if you're looking at sectors, and if you're wondering why I'm looking, you know, we have a lot of financial examples today. If you come to sector indices and we come and look at financials, who's hitting a new all-time high today? That would be financials. And so, and yet the financial sector went through, you know, what do we call this pattern here? You know, so are we going to potentially see a bunch of cup and handle patterns? So we had a cup and handle pattern from 795 to 875. So that's about $80, right? Our range here. And has it moved up $80? Well, if you take 875 plus 80, that's 955. Where are we right now? 957. So a potential target here might have been 955. And, you know, and in this case, we hit it. Okay. And this is, I think, the thing that when I first started to learn about technical analysis, that really kind of blew my hair back, like how often we saw, you know, trading within a range, and how close things would come to matching that. And so let's look at a couple of specific examples. Let me just get rid of my drawing tools. So if we come and we look at Capital One Financial. So that's ticker symbol COF. So when we look at this, it was kind of going sideways when we're looking at a 1-year chart, and then it started to downtrend, hit this bottom, and it hit this kind of 176-ish level twice, came up and didn't make it past 210, seemed to get stuck there. And it's been seeming to get stuck there ever since. And I think I had posted, I may have posted this one on X. But we had kind of a double bottom. And if you were waiting for the breakout, did it happen? It did not. And, and so now we're kind of looking at like this double cup and handle, or if you want to draw it in a broader way, you could just say, well, we have this pattern here and kind of this cup and handle setting up, but has it broken out yet? It has not. It has not. So this is one that you may want to have on your radar and just say, you know what, I'm going to just keep an eye on this because it's not broken out yet. But, if it bangs its head on this often enough, it may. And we just had earnings on this. And when I first look at this earnings number, it's at 581 and this was at 442. This is at 386. And so if you hover over this, well, it was a fairly big beat on earnings. And then if you come over here, like we're raising, well, this one. So this one, they lowered their price target. Here they're lowering their price target. So this one, you may just want to be a little mindful because I'm looking at 3 that lowered price targets and then some that moved it up. JP Morgan, a whole $1. I think that's just saying like, look at us. Like it's a very small move from 245 to 246. So you may want to just exercise some patience, but even this, if they lowered their price target by $2, this price target is still well above the top here. And if this went to 247 from 260, let me move this back. That's still giving, so 247, that's still up here in this neighborhood. And this measured move here, is not that high. But we don't have an entry yet, do we? We do not. And so what do? We wait. Okay, let's look at JP Morgan. And this is one, and I'm bringing this one up because, not because I'm seeing that we may want to trade this today, but just as an example. So, we had this period of consolidation and, if we're playing I Spy with my little eye, as I love to do, we had this kind of inverted head and shoulders, right? And this range here from 282 to 325. So, that's about $43. And so if we say, well, if we added 43 to 325, that's a possible target up here of about 368. And so even though, we could have had considered it an entry when it broke out here and came back to retest and we had this Harami pattern. So this might have been considered an entry, the bullish day here. We could have considered this to be an entry when we had this morning star-ish pattern set up, say on a day like this, or on this day, or on this bullish engulfing day where it came all the way back down here and then engulfed this candle, or on this day. And then some might say, well, it broke out here, so, maybe we could do a trade here. But it just shows, and now we're at 356, so we're a long way towards this target of 368. Will it make it? We don't know. But, you know, if we had bought the stock here when it broke out, you know, which would have been at about 330, we wouldn't be unhappy with our results so far, would we? I wouldn't. Some of you may be. Okay, let's look at Goldman Sachs. So when we look at Goldman Sachs, like once again, so this was uptrending, and this is more of a continuation as it worked out. But, you know, and here, if you're seeing what I'm seeing, now some might kind of draw this as a cup and inverted head and shoulders. Others might say, nah, I'm not counting that. I'm just going to call it a cup and handle. What does that change? And nothing, because we're still going to measure this pattern the same way. So, and this went from 784 to 955. So that's a range of $171. Like, holy smokes back, man. Like, that's a big range. And, you know, here the earnings went from 14 earnings per share to 17 to 21. And, you know, obviously the market responded well here. And now it's coming back. Now, this candle pattern today is, from a technical analysis perspective, we call this a hammer, and it's close to this, you know, potential support level. But, you know, if we're looking at this pattern and we added 171 to 955, what would that take us to? 1126. And it hit what? 1153. So if you'd exercised a little patience, and if you'd gotten in, you know, here when it broke out, or here, you know, or here, or even here, and now there's an opportunity, you know, we don't have, this candle pattern requires confirmation. But the reason I'm bringing this up is to say, you know, here might be a projected target or a possible target, and it did in fact come up and hit that. Okay, so that's that one. Let's look at IVZ. So when we look at Invesco, like now this one is kind of happening more real time, isn't it? Because, you know, if we look at this and we say, okay, back to playing I Spy. Sorry, I'm just changing my color here. We've got this head and shoulder, or cup and handle. Here's our steam coming off our hot cup of coffee. And then it broke out. And then it came back, and it's been hanging around this support level. You know, and you know, we've gone from 22 to 29. So this is about a $7 range. And you're going, well, the other one looked way more attractive. Well, the other one was a way more expensive stock. Like a $7 move on a $29 stock. Like if you went from $29.50 to $36.50, that's not nothing. You know, and today, do we have an entry? This is considered to be a hammer pattern, and we want to see confirmation on that. And so if you missed the session on candlesticks, that was 2 weeks ago. And I'll show you, I've created a whole series of short videos. Most of them are 5 minutes or less. And there's one on, you know, this particular candlestick pattern called a hammer. But could we put in a conditional order and say, or if we're buying stock, say, I'm willing to be patient. But could we say, hey, I want to buy this stock if it goes above today's high. So today's high is 30.36. So if I say, okay, 30.36, I want to enter if it goes above 30.36. And then I want to sell if it goes above 22 to 29, 7, 36, I want to sell when it gets to 36.50. Now, what if the trade goes wrong? Because that's always a possibility. So if we look at today's low and say, well, today's low is 29.06. If it goes 2% below that or 3% below that, so make it 3% times 0.97. If it goes below 28.19, I want to exit. And this one beat on earnings, you know, and so if we come and we look at, like, you know, what say the analysts, well, RBC raised their price target to 33. That's RBC. Morgan Stanley to 30. BMO to 34. Barclays to 31. You know, and so we've got choices here. Now, is this the only way we can determine a target? No, there are lots of other ways, even with a pattern like this, that we could determine a target. One of them is using the Fibonacci. So we could also come here and then click on this resistance level. Sorry. Come on. I'm using this, my drawing tool. I don't know why this isn't clicking in for me. Okay. I don't want to correct the bar. Okay, I'm going to abandon that. I don't know what's, oh, now it's clicking in. Well, for crying out loud. I want to get rid of that. Using my drawing tool. Okay. You'd think I was on drugs already. Okay, so we're going to use this measured target here, and we're going to use that target of 36.50. You know, we could have a position, you know, a 30,000, like this is 29.56 is only a $3,000 position. This is a pretty inexpensive stock. So we could do a $30,000 position in this account. So we could buy, you know, 1,000 of these shares if we wanted. And so we're going to buy 1,000 shares. And then we're going to make our entrance a market order. We only want to place this trade if and only if Invesco goes at or above $30.36. And you might say, why wouldn't I want to buy it now when it's, you know, more affordable? Because we want to have a higher degree of confidence that this support level is holding and that it's going to go up. Okay, so 30.36. And then we want to get out when it gets to 36.50. Or if it goes below 28.18. So that's how we might put that one in. And we've got a $29,000 position. We want to exit if it hits 36.50, which is our target. And this target is based on the cup and handle pattern. And so this is a note that we're putting in from ourselves to ourselves. And this is a stock trade with a target. And then if the trade does not go according to plan, we want to exit. And again, there isn't a guarantee that we're going to get out at either one of these prices exactly. Okay, so that's Invesco. Let's also look at CFG. And then I want to look at CFG for a different reason. And so again, we have this cup and handle pattern, right? And we've gone from 55 to 66. So this is, let's round and call it a $10 move. And so our potential target could be 76, and it's already at 72. So, we miss getting in down here. We miss getting in here when we had this, bullish Harami pattern, but we are where we are now. Well, does that mean we couldn't do a shorter term trade? So if you traded options, could you buy a call and have a swing target? Could we buy the stock and put in a swing target and say, hey, if it gets back up to 74.70, or I'd like to buy here and get out there. And if you're saying, well, is that worth it? Well, if you're trying to do some short-term trades to fund your, trip to Disneyland in the fall, or, to Greece in October, you might say, well, if I could get out at 74.70 and I'm buying now at 72.15, I could make 255. And well, you may say, well, like that's not a ton, but 255 divided by 72, that's still a 3.5% return. And how long might you expect to be in that trade? Maybe a week, maybe 2 weeks. It may never hit that target, but is it? And if you're looking at it, well, I could do this as a swing trade. And up next is Mike Fairborn, by the way, talking about swing trading. But within the context of this pattern, what might a target be? Well, you go 66 to 76. So this might be a potential target. So is that within the context of the target provided by this pattern? And it is. And so sometimes you don't have to, look at the pattern and say, I missed entering, so this stock is dead to me. Sometimes we can take an opportunity to trade within this target range. And so if we wanted to do that, where might we put a stop? Well, we might say, well, based on this, recent low here yesterday of 70.58, if I go 3% below that, because I'm intending for this to be a short-term trade, if it goes below 68.46, which is below this 30-day moving average, I'd like to exit. And if it goes according to plan, I'm going to make this a swing target and just trade it back to the previous high. Now, could you make your target that 76? We could. So, but, we can trade within a pattern also. And so Paul is saying, a missed entry means wait for a new setup. And so, we missed this entry, we missed this entry, we missed this entry or this entry, but is this also now not an entry? Because we have this Harami pattern occurring at a support level. We're still seeing, higher lows and higher highs. So it's still uptrending. So, we've got a new entry. And so we can, trade that accordingly. So could we come out here, right click, we're going to buy custom with an OCO bracket. And if we're saying we're okay with a $30,000 position, we could do 400 shares. We're going to make these good till canceled. We're going to make our target that 70, what was 74.70, right? Let me come back. 74.70. So in this case, we're just looking for a little win. And our exit, 68.46. And again, not a guarantee that we're going to get out at exactly either of these prices. If it gaps up, we're delighted and we'll get out for more. But if it gapped down, we could end up taking a bigger hit than we were expecting. And we're going to put this in our stock with a target, and this is a swing target. Now, we may not have time to place another trade, but there was another one I wanted us to look at, and that is KeyBank. And so when we look at this one again, and this one, is maybe a more traditional type of entry in that we had this cup and handle. We've gone from 18, call it 19 to 22. So this is about $3.40, our range. And it's come back down. It broke out, came back, broke out, coming back again. So is the potential here, to place a trade? And there might be. And so what I encourage you to do is look for new setups, or look for setups that you can practice trading if this strategy is new for you. And then look at, how to determine targets and just practice. Practice is the mother of all learning. Now, one of the things that I wanted to do was just show you, if you haven't subscribed to this channel, you're going to want to subscribe to the Trader Talks from Schwab Coaching. And what you'll find, there's a button in the bottom right corner of your screen, is that when you first get to Trader Talks, what you will see is whatever's currently being taught. But if you come to playlists, there's a playlist for this class, which is kind of right at the bottom. All the getting started classes are down there, but I created this folder called the Trade Management Mini Sessions. And so there are 15 now in the candlestick pattern collection. My next collection will be different trading patterns. But what is a hammer? What is a bullish engulfing? These are all patterns I've referred to today. What is a bullish harami? What is a morning star pattern? And so if you're not familiar with these, you can check these out and do a little bit of binge learning. Okay. Okay, so there's that. There is a survey in the chat today. I want to thank James for reposting that a couple of times. And the deal with the survey, there's 2 questions. It ranges from 1, I hated it, to 10, I loved it, and I'm going to keep coming back, and everything in between. You can also put comments in. So if there are topics you'd like to see us cover in the upcoming weeks, let us know that. Did you like the pace? My commitment to you is, if you fill it out, I will read each and every comment, and it takes you about 20 seconds max. So thanks in advance for doing that. Hit the like button. Don't forget to follow us in the land of X, James Boyd CS, Barb Armstrong CS, and you can also find us now on LinkedIn. So wander over to LinkedIn and find us there as well. So guys, that's a wrap for today. Thanks to James for joining me in the chat, and thanks to the guys behind the scenes who helped bring this class to life. I will see you guys in a webcast coming up soon. Up next is Mr. Mike Fairborn with Swing Trading. Take care, everyone. Bye for now.